And we have more stuff. We have more bad news for the markets. This one is basically inflation breaks even, does offer hope, though, to the bulls. And this is coming from CoinDesk today. First mover Americas, as Bitcoin dips, inflation breaks even and offers hope, to the bulls. The latest moves in the crypto markets in context for February 21st, 2022. And so essentially, here's what's happening this morning. Market moves. Bitcoin reverses early gains as Kremlin dashes hope for Ukraine peace summit. Like I said, this is the Ukraine deal is really what's pushing a lot of people off. And part of the problem is that cryptocurrency is not being treated as something separate from the stock market. It seems to be highly correlated to it, which definitely means institutional investment is going on in it, which could be considered a good thing from the perspective of price, right? However, what that also means is that it's strongly tied to the stock market. And in theory, like if we're looking at specifically Bitcoin, because we went over the idea that like there's a difference between Bitcoin and Ethereum and how they function. Ethereum definitely more centralized, and then Bitcoin, the decentralized kind of savior, fix the money, fix the world principles. Those need to decouple, and Ethereum, I think, perfectly fine to follow the markets, the traditional financial markets. Bitcoin, I feel like, shouldn't be following the traditional financial markets. However, because of this institutional investment, that is what is happening. So U.S. inflation break-evens suggest Fed's tightening cycle may shallow, support Bitcoin's long-term bullish prospects. So Bitcoin is back on the defensive, with Kremlin calling the idea of a dialogue between Russian President Vladimir Putin and his U.S. counterpart Joe Biden premature and dashing hopes of a potential Ukraine peace summit. The cryptocurrency was last seen trading near 37,600, representing a 2% drop on the day. Prices hit a high of 39,500 during the European hours after France championed the idea of a Biden-Putin dialogue over Ukraine. Rest of the cryptocurrencies have come off daily highs, tracking Bitcoin, with Ether funds seeing renewed outflows, according to ByteTree data. With the U.S. markets closed on account of the President's Day holiday, Bitcoin appears to be the only macro asset available for trading in the spot and derivatives market. As such, escalation of tensions between Russia and Ukraine may lead to sharp losses in the cryptocurrency. So that's important to note. Basically, today we have the President's Day holiday. That's why we have the kids home here. And I'm sure you guys have that same situation going on with you all, or in daycare, or whatever it may be. But it's interesting because those markets are closed down. So really the only thing that can take the force of whatever market influences that are happening on a geopolitical scale is going to be cryptocurrency today. And so whatever you see potentially that happens today could translate into the markets tomorrow, which could be interesting, almost like a foreshadowing of what's going to happen. The daily chart paints a bearish picture with a rising trend line convincingly violated alongside a below 50 or bearish reading on the relative strength index and a negative MACD indicator. The double whammy of Fed fears and lingering geopolitical tensions are likely to keep Bitcoin under pressure in the short term. Calls for a 50 basis point rate hike in March have grown in the wake of a hotter than expected January inflation data released earlier this month. But break-evens support Bitcoin's long-term bull case. Despite recent crash, Bitcoin bulls remain convinced of the cryptocurrency's long-term prospects, with many anticipating a shallow Federal Reserve rate hike cycle. Data on U.S. inflation break-evens, which signal the expected path of price pressures over different timeframes, suggests they might be right. The spread between the 10 and 2-year break-even inflation rates fell to a record low of 1.2% last week. That's perhaps a sign of market players expecting inflation to drop back in the long term, weakening the case for aggressive and prolonged stimulus withdrawal by the Fed. Quote, it's another way of telling us that inflation will drop back in the longer term, thereby possibly cutting the life of any Fed tightening campaign. An inflation level that is high enough to eliminate deflation fears, but low enough to keep Fed hawks at bay, end quote. Ashraf Laidi, the strategist and trader, founder of Intermarket Strategy and author of Currency Trading and Intermarket Analysis, said in a blog post. Inflation break-evens are calculated by subtracting the yield of an inflation-protected bond from the yield of a nominal bond during the same period. The record low spread between 10 and 2-year break-even rates suggests the Fed tightening fears may be overdone and Bitcoin could survive the impending liquidity withdrawal. According to Laidi, the narrowing spread probably helped gold chalk out gains in recent weeks. Meanwhile, Bitcoin touted as digital gold failed, perhaps due to its tight correlation with growth stocks. And this is kind of what I'm talking about. I also don't think that necessarily should be tied to gold. I think there's a difference. I think there is a subtle difference between, a digital asset and a hard asset, as there should be, right? The question is, as miners, from our perspective, does gold generate revenue for you? Is there an active way? And if you really can't get into mining gold, which is very difficult to get into, right? Then you're looking at a lower barrier to entry. Now, I was talking about this in relation to proof of stake too, which I think I do need to clarify some positions on as well, because there seems to be a misconception when we get into reaching out to the markets or to the cryptocurrency investors that are outside of the mining sphere, especially when it comes to proof of stake. There are comments like, oh, he's looking for a way out, or, you just hate proof of stake because you won't be able to mine and make money anymore. And I can see how that perception would be, but you need to keep into account here, as a miner and as large miners, especially large GPU miners, really you have a couple different sets of classes within Ethereum in particular when we're talking about the move from proof of work to proof of stake. You have essentially the IPO investors, all the people that basically got all the coins before everybody else and pretty much held on to them and are going to be the elite ruling class, including developers, people that work from that perspective. Then you have the miners, which would in a lot of cases be essentially the worker class, right? So the people that are putting in the work to maintain the economy and keep all the transactions flowing and everything functioning. And that working class obtains the Ethereum, in this case, basically in return for that. And then you have the participating class, the people that are the consumers of the product, right? The consumers of Ethereum and all of that. Now, what they are doing is they're transacting on the Ethereum blockchain to trade things, maybe like NFTs, etc., whatever that may be. So you kind of have a historical class system that is setting up here that we've talked about in the past. Now, the most benefit from proof of stake will go to that kind of ruling class of elites that got into the IPO early, or the developers. And the reason for this is, like we've tried to elaborate on for a lot of people, that seems to not really get through down to the consumer class, is that essentially, basically, when proof of stake comes into play, you will have a consolidation of the Ethereum towards the upper class, towards the elite class. Now, that will filter through, if so chosen, to the miners as well. Not to the same significance as the initial IPO investors, but the miners will have a significant advantage over the consumers at this point because they have been mining and stacking Ethereum. So in theory, for example, like last year, I personally, on a small farm, mined enough Ethereum, 40 Ethereum, to go ahead and actually have a full stake myself if I so chose. That would actually potentially be better for me because I would be able to now, off all of the transactions, just stack up more and more and more and more, create more stakes, and keep continuing on. There is no longer a low level or barrier to entry for new people. Let's say you're a consumer and you want to get into the validation process. You got to save up 32 ETH, which is going to be astronomical. So, and that's going to be even harder to do if everybody that is creating and earning the new blocks has a huge advantage on you from mining or from the IPO. So at my own detriment, I am touting the idea of easier barrier to entry to help further decentralize the network. I want you to have the same potential for earning and validating on the network as I do or anybody else does. Is that even possible with Ethereum because of the IPO? Because of proof of stake? Probably not. This is the issue that we get into. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.